Welcome to another episode of Business by the Numbers. I'm your host, Demarest, CPA with Paar, Melis and Associates. Love that new Acura MDX, and the dealer really wants you to lease it. Should you lease it or should you buy it outright? It doesn't even make sense to lease, even though you're only going to keep it a couple of years. Does the type of vehicle matter, and does that change my decision? Everything leasing or buying this week for vehicles and also equipment is what we're going to talk about this week.
Shop owners, are you struggling to find and retain top-tier talent for your automotive shop? Introducing Promotive, on the web at gopromotive.com. With over 40 years of combined industry and recruiting experience, we're the ultimate staffing solution. We go beyond traditional agencies. Our team provides dedicated recruiters and account managers advising on processes, compensation, and benefits. We focus on placing technicians and service advisors with shops that offer the best culture, training, and long-term growth opportunities. Trust our experience to match the right talent to your shop. We carefully select shops that value employee excellence and provide an environment for success. Our dedicated team leads the entire process, leveraging our industry knowledge and expertise. Partner with Promotive and experience their advantage to help you build a high-performing team that drives your shop's growth. Visit gopromotive.com today and let us help find and keep the best talent in the industry.
Before we get into that, I just want to stop and say thank you to you and the rest of the dedicated listeners. Remember, if you want your question answered on here, just have a question for me or an idea for your future episode, shoot me an email at podcast@parmelis.com. New announcement, my book, Beyond the Bay, is a financial playbook for auto repair shop owners, which is inspired by a lot of your questions and most popular episodes, is available now on Amazon.com in paperback and Kindle for purchase. Want to talk to me about accounting and tax services for your repair shop? Shoot me a text at 301-307-5413. The whole idea of this episode that we're talking about this week is going to be talking about leases versus loan. And it's important to cover because there's a couple differentiating factors, because not all leases are created equal, and sometimes it depends on what you're actually leasing. Also, a lot of people are going to instantly probably think this is only going to be specifically related to taxes. But we need to look at the dollars and cents to make sure that you aren't making a bad financial move just to save tax dollars. To keep it simple, there are really two major differentiating factors as far as what you're buying: vehicles and equipment. Let's start with vehicles, though, because that was what the most recent question was I received, and it had to do with the purchase of a vehicle. So my customer that was calling me the other day was actually looking to buy an SUV, but this is actually a better example because it actually was a small SUV, so it's going to be treated just like a car. The most common that I usually get has to do with you guys buying loaner cars, so what better example to do than a customer that reached out and said, Hunt, should I buy this loaner car, or they're going to give me a really, really cheap lease on this? Does this make sense? So let's go down through this example and kind of how it transcribed or transpired with my client. So client calls me up and says, Hunt, looking to add some loaner cars to my fleet. We all know the benefits of having a loaner car. I need to get another one on there, and I don't really have $25,000 burning a hole in my pocket. Client looking to get into a Corolla, around $25,000, and was presented with two options. And he came and presented these options to me. So he said, Hunt, I can go out and I can buy this, right? No money down, $25,000. I can finance the entire amount on this. I'm going to be paying like $500 a month, like $6,000 a year for 5 years. Option 2 is, again, still no money down on this, but a $300 a month lease payment for 3 years. His ultimate question, just like yours, would be, okay, well, what makes the most sense? And pretty quickly, I said, well, buy it outright and don't lease it. He didn't really ask why and said thanks and moved on, but others that are curious and have been presented with the same decision, here is why I chose that and why I chose that rather quickly. So like I said, not all of this has to do with taxes, but I'm an accountant. I do taxes. That is generally where I'm going to start. If you make all of your decisions based on taxes or tax savings, you're probably going to make the wrong decision from a financial sense. So we're going to look at this from taxes. We're going to look at this from just a strictly money perspective and kind of see how it works. So if we're judging these two, right, whether we buy this outright with a loan or we lease this, what are the difference from a tax perspective? From a tax perspective, the purchase of this vehicle is going to be a lot more favorable, especially given this exact situation. I know that one of my clients' primary objectives here was to save money and save money this year. So if he's going out and he is buying this car this year, whether he's paying cash for it, whether he's getting outside financing or using the dealer financing, if you sign the paperwork and take delivery of that vehicle in December, anytime this year, you get the tax deduction for it, even if not a cent is paid on that loan, right? What kind of return on investment is that from a tax saving perspective? It's infinite, right? You sign on a dotted line that you're committed to paying $25,000 over probably 5 years here. You get a full write-off the same as if you paid cash for that. So from a tax perspective, a loan, a purchase of this is going to be a no-brainer. Now, how does a lease work for taxes? We know we don't get the write-off of it because that is not our property. So when you're leasing a vehicle for 3 years, you're renting that. And that's essentially the same way that the deductions are treated. Just like every month when you write your check to your landlord, you get a deduction. When you make that payment to the dealer or the finance company, you will get a deduction as well. So you buy it in December, you don't make any lease payments until the following year, you get no tax savings this year. Over the course of the entire period, whatever you pay towards a lease is going to be a tax deduction, but there is no front loading of the depreciation like you do on a purchase or a loan. So we got to take this from other aspects because there are times when leasing does make sense from a money perspective. And in general, and someone's going to come back and say, hey, hon, here's an example of when it doesn't make sense. But leases are generally pretty popular on luxury vehicles that have a steep depreciation curve or something that you don't want to keep outside of 3 years of the warranty period anyways. So let's think about how a lease works. The way that a lease works is what is the value now and then what is the value going to be ultimately when you turned it in. The dealer is pricing that they hopefully have some equity in it at the end, and then you will probably have no equity. So if you look at this and they say, hey, we think that this vehicle is going to lose $40,000 in value, they're probably going to build in that your lease payments are going to be at least $45,000 or $50,000. So if you're looking at saying, hey, Hunt, do you think that I could outrun and I could beat this lease on a 3-year period? They have accountants just like me that are hopefully working out that you can't. Now, the good news is if you kind of win on the upside of this and say, hey, I know that I'm going to commit to having zero equity at the end of this, right? I'm just renting this and hopefully at the end I can turn this in. The good news is if you turn it in and you have equity left, there's always an option to keep that vehicle and buy it. But obviously if there's negative equity in there and it's depreciated more than the dealer thought, you would walk away from that and you end up winning. So what you're doing here is you're limiting your downside, and so is the dealer. So if you end up buying it outright and you have equity in it of $15,000 and your buy it is only $10,000, then it's a no-brainer, right? You're going to buy out that lease, and if you want to turn around and sell it the next day, you can get your money back. But in that case, the dealer wins as well, right? They're getting fair market value for that vehicle no matter what. Now, if the tides were reversed and your buyout amount was $15,000 and there's only around $10,000 of equity in the vehicle, of course, you are not going to buy out that vehicle. You're not going to buy out that loan, and the dealer's going to get it anyways. They've already taken your payments. You've taken a little hit on it, but you're guaranteeing that you know what your vehicle cost will be over that period. Don't have to worry about depreciation. Don't have to worry about unknown facts or demand decreases. Here's your payment. If you end up being lucky, hey, maybe there's some equity at the end, but most people when they lease are expecting it to be zero towards the end of this. So Hunt, when does this stuff make sense, right? If you're looking at this, it seems like that it's an insurance policy, and as we know about insurance policies, there's always a premium that trends towards the insurance company. So do you think the dealers are going to be any different? Do you think this is going to be really, well, hey, sometimes we win, sometimes the dealers win? No, this is like 90% of the time that the dealer's going to win or the finance company's going to win, but there is certain situations where it makes sense. Really what I tell a lot of people is if you don't like to keep your cars that long, then it's probably not a bad idea, especially if you've been burned in the past for swapping through vehicles and really ending up upside down on this. If you like having a new vehicle, you think that your committed monthly amount is $800, then great, go for it, do it. You're guaranteed to be spending that amount of money. Now, from a monetary perspective, no. It's never going to make sense, but I will argue, even if you finance this stuff, it's never going to make monetary sense if you finance this and you keep a new car for 2 years and you trade it in. The monetary sense of this is, hey, getting that paid off, getting that into being, a paid off vehicle that doesn't cost you any money. But if we're looking at this exercise financing versus leasing, you're having a car payment either way. The most common thing that you see on this is super luxury vehicles that have a massive depreciation curve. I know when I went to a BMW dealership on it, they had an i8 there, and this was years ago. I was asking a guy, I said, how many of these have you guys sold? And the guy was like, 0. I have never sold a single i8. And I said, well, that's kind of weird. What do you mean? He goes, we don't sell any of them. We lease these, right? And I was like, well, why do you lease these? And it's like the market is unknown on these or pretty bad on the used market. The reason people do it on some of these luxury vehicles is you have the same concern about depreciation, but those swings are generally a lot larger. Well, let's say you went out and you bought that i8 brand new for $150,000. You paid that loan for 3 years, and now you maybe owe $100,000 on the note, but the car is only worth $75,000. Right? You're in a hole pretty bad, and it makes the Corolla example pale in comparison. In short, though, we almost never see leases in businesses. Most of our clients are buying non-limited vehicles like trucks and SUVs, which we can write off the entire amount in the first year. And if they're not buying them, they're generally buying smaller and reliable vehicles like Toyotas that just hold their value pretty well. So for all the reasons listed above, it usually makes sense to finance these vehicles. However, if you do always like to have a newer vehicle personally and you don't want to mess around with the trades, there is an argument for lease, but at what cost? Every month, auto repair shops can lose over $20,000 in uncredited parts, cores, and lost profits. WickedFile's AI-powered software is a game changer. It helped one shop owner recover over $10,000 in missed credits, and others have recovered tens of thousands more. WickedFile puts cash back into your business and hours back into your day. Stop leaving money on the table. Visit wickedfile.com to learn more and get started today. The topic and the whole idea of this episode came from someone asking me about leasing a vehicle, right? But leases, as far as the frequency of what we see them, are honestly much more common in a repair shop to seen on the equipment side. So I will go out there and say, like I just said above, I almost see no vehicle leases on repair shops. Most people just don't do them. And like I said, the people that are doing them are generally leasing luxury vehicles, which is, again, just not that common. However, for equipment, for every 9 equipment leases, there's 1 equipment loan. Almost all of your equipment financing in today's day and age is done through leases. Great American Financial, you get the idea on it. Those kind of companies are packaging and selling you guys what looks to be loans, but they're really called leases. When we're talking about leases versus loans for equipment, what we're actually talking about is operating leases versus capital leases. So when we're talking about leases, and we can kind of make the determination between equipment and vehicles, with different tax treatment, but it doesn't actually matter what type of equipment or vehicle this is, it has to do with the length of this. So when you lease a vehicle, you're generally leasing this for 3 years or less, whereas a equipment loan is 5 years or more. 3 years or less is a short-term lease, which we call an operating lease, whereas a long-term lease, which is called a capital lease, goes for longer amounts of time, and then also at the end of it, you guys own it. At the end of that Corolla example, if my client would have went out and leased it, at the end of his 36th payment, he gives the keys back. He has nothing to show for it, right? He was renting that. However, when you go out and get that alignment machine and you lease it for 5 years, after that 60th payment, you technically give them $1 and you own this. The only time that we really see operating leases for equipment is in the past where people would finance or would rent stuff like a copier. Those were generally 2 to 3 year financing on it, but leases. You pay your monthly payment. At the end of it, you either renew, get another copier, or you give it back to them. So let's look at kind of the same example as above, but for equipment, right? If you're looking to buy an alignment rack, you generally have 2 choices. You can finance it through the bank, or you can lease it to the vendor or related party for probably similar. 5 years on the financing, 5 years on the lease. So from a tax perspective, what makes the most sense? From a tax perspective, these 2 are actually treated exactly the same. Whether you sign a lease on a 1231 or you sign a loan on 1231, it'll be treated the same as if you paid cash for this outright. So the long-term capital leases are the exact same tax treatment as a loan. So from a tax perspective, financing that equipment or leasing your perspective, we don't care. It is exactly the same outcome for you. So if it's the exact same outcome for taxes, how do I decide? So the major difference has to do with the interest rates. And arguably, it's the only reason why these guys package these as leases is the interest rates or what they have to do on the interest. So when you go out and you get a loan through a bank, banks will always give you interest rates. There's rules about this stuff. They cannot give you a loan and not tell you what an interest rate is. However, leases almost generally never give you an interest rate, yet monthly payments, and you have to kind of back into what that interest rate is. When I figure out what your percentage is on it, there's loan calculators out there, but generally, if you kind of compare it to conventional financing, it's very easy to tell just from a monthly payment, right? You want to put it in there and you'll say, hey, the bank's going to give me 7%, 5 years on it. My monthly payment's $1,000. My lease payment is 5 years. You know you're financing the same amount and your lease payment is $1,200. You know that the lease is more expensive, and I would probably go with the bank loan. So other than comparing monthly payments on this, what is another benefit that a loan has that a lease does not? So generally, loans are done at a lower rate. Leases, they usually penalize you a little bit and have a higher interest rate, but nowadays sometimes it's not the case, so you always need to check on this. But the big reason and the big benefit that the nod is always going to go to financing this with a conventional loan, not a lease, has to do with saving the interest if you pay this off early. So if you sign a lease, you are agreeing to 60 payments at whatever, $1,200 a month. Whether you pay all those 60 payments over the allotted 5 years or you pay them today, you are going to pay 60 payments of $1,200. There's no break for interest on paying it off early. However, if you have a loan and you want to pay it off 2 years into that, you will not have to pay the interest that has not yet accrued, only the amount that was accrued and paid through that point. This is one of the big reasons why so many companies push leases. It's a guaranteed rate of return. They know that they're going to get that money back, and in worst case, they might get it quicker than they expect, but there's no way to get around the interest, or what they usually call this is finance charge. Now, you might be saying to yourself, well, Hunt, what the heck, right? It doesn't seem like it makes a difference on taxes. If the dollars and cents make sense for me to go financing and, we can possibly save some money on interest, what is the benefit of the lease? The benefit of the lease is, like I said, there are some certain situations where some of these equipment vendors are more or less kind of subsidizing the lease amounts, and you can get some relatively cheap financing. Rates are pretty high at conventional loans or conventional banks on this, so maybe you might luck out and the lease is cheaper. Generally, though, what we see for people is leases are what people go to when they don't feel like looking for other alternatives or they don't have any, right? And that's why they're kind of priced the way that they are. If you don't have a good relationship with your bank, if you don't have maybe the best financials or the wherewithal to go and get a loan on it, you're probably just going to take whatever financing the vendor offers. However, if you go to the bank and you can get a competitive rate for a, equipment loan from the bank, then it's pretty easy to go and compare and see what options you have. Just like anything, guys, what might make sense for you might not make sense for another shop, and what might have made sense for your shop last year might not be the current environment that you're living in here now. Take a look at this stuff. The tax difference is never going to change, but some of the financial side might. See what makes sense for you, see what you plan to do with this equipment or vehicle, and make the right decision for your business. All in all, though, to sum it up, if I'm going to give two choices, I'm almost always going to go with the loan, because there's a possibility it could save me some money, and there's really no way of it costing me more. However, the leases are sometimes instant and don't require a whole lot of work at all. So if the money is the same or even close, a lot of people end up leaning towards a lease because it's just not worth their time and frustration of going through all of the bank underwriting. As always, please share with friends. If you have any questions, ideas for future episode, shoot me an email at podcast@parmelis.com. Just want to say thanks again for listening on the Automotive Repair Podcast Network. Don't forget, you can find the rest of the shows on the new Automotive Repair Podcast Network app on your favorite podcast listening apps. Thanks again for joining me on Business by the Numbers. Stay safe out there, and I'll talk to you all next week.